Hello, everyone. This is Dr. Duru from Ahan Analytics with the market breadth. Let's go through the market very quickly. We had a good, strong follow-through day. It's the exact kind of day that I was hoping for and that I expected, and I discussed the possibilities for in the last video and in my last blog post. What you're looking at here is Swing Trade Bot showing the trends. Notice that today was strong enough to flip all the indices from down to either flat or even up for the Russell 2000. As I discussed in my blog, I bought call options on IWM, which is the ETF for the Russell 2000, and I went ahead and flipped those today. Again, because I think we're in a bear market, it doesn't make sense to hold on to successful trades much longer than I have to. And IWM has been such a laggard that I don't trust it. I can't trust it for longer than I can throw it, at least for now. And mind you, I am a long-term holder in the IWM shares. I'm just trading around it with call options. Okay, so let's move on to market breadth, my favorite technical indicator. Let's start with AT50, which is above the 50-day moving average. On TradingView, it's called MMFI. AT50 is my own nickname for it. You can see here the evidence of our strong follow-through day. AT50 increased by 3.5 percentage points or so. Now we're back above the 30% threshold. Just as a reminder, my claim on Friday was that this day was strong enough to indicate a likely sustainable low, just because this is a strong up day near or above, away from the oversold threshold. The oversold threshold is at 20%. And again, I can't emphasize this enough. This is very positive for a sustainable low, but we can't predict the bottom. This is a bear market until buyers otherwise prove it. And so since it's a bear market, we can be subject to quick reversals and faded rallies. Let's go to the other market breadth indicator, which is I call it AT200, which is the percentage of stocks trading above their 200-day moving averages, and this just confirms the strong follow through. We had a second day up day, almost 3 percentage points for this long-term indicator of market health. Okay, now I'm going to switch to logarithmic scale as I go through the indices really quickly. The S&P 500. Let me scale back. You can see now is making a run for 200 resistance at its 200-day moving average. That the timing here or the pacing is perfect just for the Fed on Wednesday to give basically the final call or decision on whether or not buyers will be motivated to push through this and end the bear market or get faded right at resistance. So please keep an eye on that on Wednesday. Again, the Fed is meeting to discuss monetary policy. Now we have the Nasdaq. The Nasdaq was actually pretty weak. You see that it only gained 0.3%. And that's because people are still very tentative and cautious about the big cap tech stocks. I'll just give you some examples here. And by the way, I am long a call option for QQQ. It's the long side of a calendar call spread that I bought last week. Anyway, let's see. What's another? Okay, good. NVIDIA is a good example. It lost 1.8%. I went ahead and bought a put option when it hit the 20-day moving average. That's kind of as a hedge on my QQQ position. Meta, which I bought a few shares of, it went nowhere. It was flat. And oh, right. Microsoft, it was flat on the day. It even got faded close to the downtrending 220-day moving average, which is the dotted line. And what's another big cap tech? Oh, well, I think Amazon is up there. You see, Amazon was down by 1%. It's still struggling at the 200-day moving average. As you can see, this churning above and below, but it's mostly been resistant. So that's very concerning. I'm also a shareholder in Amazon. And then, of course, we have Tesla, which was down a whopping 4.8%. And I thought it was poised to make a run for converge resistance at the 220-day moving average, but instead it looks like it's getting ready to plunge right back to a fresh test, to a real test of the 2023 breakout point. Okay, last thing is the VIX. We have to keep looking at the VIX. You know, interestingly, well, I think it's because the small caps had such a strong day, the VIX fell down again by 6%. So it's falling quickly. The conventional definition is above 20 is is considered elevated. So it's almost past that elevated point, which of course means it increases the tension of the trading action. Okay, so that is all I'm going to do for today. Again, we have a lot of catalysts, important catalysts with NVIDIA and its conference, which is going to include quantum computing, and then the Fed on Wednesday. If you have any questions, put them down there in the comment section. Otherwise, go ahead and subscribe to this channel so you can get a timely notification of my next video. And of course, you can always check out more details on my blog at drduru.com/122, all letters. Thanks for checking out, and I will see you the next time.